Welcome, good people. It's the Crypto Sniper. Yes, glad to be back with you. And Bitcoin at 89,666. Ooh, that was its high, actually, so far. Knocking on the 90K door. Currently trading 86,246. Marching on out of its continuation pattern. So update, obviously very positive. There's clearly more liquidity sloshing around generally than we put in. So with the interest rate hikes, they've done their usual fire and water trick. They're putting out the fire by putting the interest rates up, inflation, pouring water on one end of it and providing enough liquidity on the other end to keep extending the fire petrol on the other side. Because this is how we come to have this potential surge. Of course, it's a Trump trade. There's a theme. We're going to touch in gold, Bitcoin, a number of things actually in this video. So actually, let's go to the last video that we did and just remind you of the headline. Bitcoin to outshine, we said, and that was 13 days ago, Bitcoin to outshine the gold and to take over from gold now as the anti-fiat key runner. Bitcoin to outshine gold. That was 13 days ago that we said this. In other words, it's time to put more of your emphasis of the anti-fiats instead of in gold, to push more of it on Bitcoin in terms of your focus, and expect that additional beta to the upside, that higher move, that the higher base percentage move that a much smaller market cap can do. So it's around 1.5 trillion, probably heading for 1.6 now, and gold is about 10x that. So obviously you can get bigger numbers out of Bitcoin, and especially since the narrative has come out, the Trump trade is a pro-crypto trade. So Trump has been very pro-dollar and very pro-Bitcoin. He's not a pro-gold guy, for example. And don't forget, the gateway into Bitcoin is Tether, which is backed by treasuries. It's amazing how all the drama around Tether died once they started using treasuries as collateral. They were being pursued and harassed and all the time, and it was Tether this, Tether that. SEC concerned, drama and articles. It was all part of an extraction racket, and then boom, poof, suddenly they go, we'll buy US debt as our collateral for the stable coin that everybody jumps into before buying Bitcoin, and when Bitcoin is in a bear market, jumps out of into, and suddenly Tether it's okay. We're not hearing much FUD about Tether nowadays, are you? Anyway, back to this. Bitcoin to outshine gold was the call from 13 days ago. Let's have a look at that Bitcoin chart. And it's classic continuation. We did, of course, while on tour, warn you not to lose your head and just go complete insane leverage on account of the state of the equity market. So we'll cover that, property, equity, and some of the risk to demand destroying event. But this progress here is actually very, very good. We're on a log scale chart here, and I'm using an exchange I don't typically use. That was the breakout that we highlighted. Let's do it in a slightly smaller Koki there, and in our favorite color, you know what it is. And that was the break that came a number of weeks ago now. We are on a weekly chart. We did a video also to highlight this, that Bitcoin had broken the capping descending grind line of what is a megaphone structure to the downside on a very bullish pole like that. And the key interesting fact is targets. Everyone asking when and what targets. We've drawn this and had drawn this a long time ago and discussed this a long time ago, and we'd spoken of a 150k target a long time ago. It was the first time we gave a target above 100,000. And why did we do it? Inverted head and shoulder draw that takes you to the 145,757.73. Now the bull pole continuation structure, that's the bull pole. So this basically captures, there has been two major surges. And the first one was the Bitcoin ETF, the BlackRock and Bitcoin ETF approvals, and all the others that came in from here. That gave you this bull pole. That took you to the 73,900, basically. That was your pole, Bitcoin ETF. Then 6 months of continuation pattern from March all the way until gateway of October. We were in Panama and we were highlighting this is a key break of the capping descending line. We highlighted this on our Twitter and also on our YouTube channel. Key break for Bitcoin. That is continuation to upside. 13 days ago, after a small pullback, we said again, remember that's about 2 weeks back. You're in your second week here, your first. You could have still got in the low to mid 60s, however, low, I should say 66, 67,000. And now you would be looking at 88,000 knocking on 90's door. That is a very good 2 weeks. You know, you're talking about 25 going on 30% as a gain. Really strong weeks and more to come. So we warned also in the previous video that it's good, it's continuation, it's upside, but we did just say be careful of going too big or without stops, leaving money management behind and going too large, not having stop losses, chasing up ever higher. There is a possibility of a demand destroying event. Now at the current rate of expansion, it would be quite easy actually to see this make a potential target before such a demand destroying event. We could have a blow off in the stock market. We could have, euphoria for the Trump inauguration, I say, winning the election and being inaugurated. We could have a degree of euphoria for a while longer on the basis that he's pro-business, he's going to be lower tax, etc., etc. So you could continue to see liquidity circulating out of maybe bonds into a little bit of the stock market and definitely into crypto. If we were to see the likes of SEC head Gary Gensler removed, I would expect a further surge. Some of that might already be priced in, but if a new SEC head that was coming in with a more approachable take on crypto, this is all going to be pumpermentals in this. So I think we could have the Trump trade and SEC shuffle and some lawsuits coming to quick conclusion. Maybe that'll be good news for the likes of Richard Hart as well, as Ripple and many others that are being a little bit moribund by the lack of clarity on the position in terms of, is it a commodity, is it a security, etc. But the lovely thing about this is the clustering of these targets. Now typically targets are just run, so you would have the 150k assess being run, and they aren't run exactly. You could end up into the 160s and the tired beyond in a blow off. I'll be showing you how much you can overperform on a target. You don't want to be counting that in. Targets are there for a reason. They're safe exits with sufficient liquidity. They don't get you out at the exact high, but they save you a lot of pain. And we'll be illustrating a little bit on that. There was, in actual fact, very good exits on the Bitcoin versus gold, which we'll show you in a minute. So Bitcoin to eat gold's headlines has certainly turned out to be the trade because, as I've said, the Trump trade is actually pro the dollar and Bitcoin. And I want to show you what's happened to gold recently. Gold is in a more pullback state, had a small head and shoulder and is down. That will become extra interesting when we look at the Bitcoin versus gold, or the Bitcoin divided by gold chart, which we will do in a bit. But just before we go too much further, if you hit the link below that says free course materials on how we do our HVF trading, how we do our pattern analysis, get a video every single day, short. These are 5-minute videos, a lot shorter than our YouTube's, easier for you to consume. Quick, impactful bullets, slides, boom, here's this, and another short one each day, just taking you through for roughly a week through a mini program of what it is we do, entirely free. Pop your email in and we'll deliver it for you. There's no spam. We do no selling of lists. You will only get a newsletter from us once a week. But you would get this clarification on why we were expecting it. And we said this on the first in our newsletter as well. So you will receive our monthly newsletter as well for free in your email box, which shows our current thoughts. And why gold and Bitcoin are the performance assets right now, and also why we expect Bitcoin to break and start eating gold's gains for a bit now. Anti-fiats. The king of anti-fiats was gold. So this is our framing, and I like to do this visually for people so that they understand. The king of anti-fiats is gold. Bang. That's the guy who moves first. That's exactly what's happened. Gold broke out of its continuation first and started reasserting because central bankers first buy the absolute go-to. Silver is a secondary, kind of like an alt 2. Gold, and miners are almost like a degen token, only we're talking about the small and medium side. The bigger miners have already begun moving. The anti-fiats is that entire luminous green box, and there's a subset in the anti-fiats which is the digitized versions of anti-fiats or new financial system, depending how far you're at with your understanding of what's going down. And the king of that is Bitcoin, and that's why we've continued to see dominance move up. It's gone from 39% to early doors 60s, and we'll cover Bitcoin dominance charts also shortly. And then you get the likes of maybe Ethereum, Solana, and then ADA and XRP as alts that will follow on. These will outperform in a short time what Bitcoin will do, but you need to stay in the major mover initially first, which is the God market, and rotate only clearly after there is a clear alt dominance or a silver miner dominance in the fiats. We talk about this. Let's cover this in the charts, because these were charts we were showing, and we suggested that crypto was going to do a similar thing to gold, and that you had to wait for gold to play out. Gold was playing out on a longer time cycle. That's 3-week chart, while this is, wait for it, of a 5-day chart to get them on the same scale. But you had to have the two continuation reasons here. Here you were, that broke out to the upside and did a pull, and you can see it like that, breaking out of a continuation pattern. That was the Bitcoin ETF. Breaking out of the continuation pattern. Long-standing holding pattern in a broadening structure, followed by a break, a pullback, and then boom, that was your great move. Bitcoin at the same time, in a similar situation, but lagging gold. Broadening structure over here. So we take those two big arrows head out. Broke, key moment, and just starting its move when we did this, that was November the 1st. And you were still buying for upper 60s. And now, we are already on our way to the 90 as a result. So you can see the following order, the firing order. In fact, we did a visual for that as well, which is kind of, there's a cylinder firing order in terms of what they run in. And if you need to understand that to maximize, first gold, then you're going to have a little bit of Bitcoin. We need the gold-silver ratio to flip then and silver starts to overperform gold, and similarly the alts start to overperform Bitcoin. But they're in the firing order of the cylinders, and you've got to stay in the one that's firing. And this is a bigger cycle than you think. And right now, with debt and fiat collapse, so we're in a stagflationary fiat and debt collapse, where prices are stubbornly high and going higher, and there's low growth environment. That's how they deflate the debt market, because there's so much of it coming at a record level, that you need the monetary aspects first, which is gold and Bitcoin. They are the digital golds and the actual golds of the system. And in a fiat and debt failure, actually you're going to have an extended run in these two, and people will pivot too soon to their favorite alts for the outperformance element. So that warrants us to take a look at the Bitcoin dominance chart, which we can and will do as well. There we go. That's dominance. We'll come back here. So this is steadily moving. I think when we get to this legacy funnel zone, we'll have a little bit of chop and a little bit of resistance, and we could pause somewhat over here. So here's where you could see on the low there you had 39.65 Bitcoin dominance, and today you're at 59.89. So you could continue. Remember, we've got a target of 150 for Bitcoin. You can continue to see that march up a little more up into this zone. I think it would have a bit of problems going easily beyond this inverted HVF draw that we have from some time ago now. I think that will be a technical level back up into the early 60s again. But it can walk its way up there for a while longer. So you should have still some Bitcoin in your setup. In this event of a bit of a rejection here, that's where the likes of some of the alts, if we get a bit of a strong pullback and Bitcoin marching more slowly, this is where some of those alts might shine in terms of the market cap. We should actually get that up and do a run through the crypto market cap for you as well. So Bitcoin up 28%, ETH up 37%. Ethereum's actually had a poor season so far. So yes, it's a higher beta. It has a lower market cap. It's easier to push itself up through the 400 billion mark. You see, Bitcoin is actually 1,750 actually. That 28%, I underestimated how much it's changed its market cap. So I was saying 1.5 to 1.6. So it's 1.750. So a good march forward there. Solana very strong. Now we suggested that in our previous video that Solana could outperform on a case versus that. Now it's about the same as Ethereum, but it's done pretty well. Doggy, well, I don't do a lot of coverage on Doggy, but there's no doubt that Elon has some form of a plan with that thing. 145%. Wow, I mean, it's, who knows what to say about that? I don't. Technically, it hasn't always given us anything very, very clear that we can have a look at. We can, I mean, it just has surges out of the blue when they throw some money on it. If we have a look at it, there's a big surge. You could argue there was a little bit of a continuation pattern. You see the dog come on there? There was that big reversal that we called some time ago, and it hasn't looked back. That was, wow, that was the end of the bear market 2020, 2021. Big surge, and then it's been in this kind of structure. It's broken out and run real hard. Difficult to have made a clear-cut call on it. We do have an upside HVF draw. If this were to play out, you could actually see $2.41 at the end of that. So a little bit of a point of interest here. There is an HVF structure, very low slung. But I mean, this is down to Elon and his friends and what they choose to pump as a theme meme coin, which will probably have a more determined use at some later point. I don't know where I stand. You know, meme coins, what's their point? Well, if they're holding base for future tech that's going to go into them, they could do very well. Is there a reason to have it? I don't know. Maybe, you know, we'll all have a meme coin later for our favorite hobbies and clubs and groups of people. I don't know. I don't understand it, is my base opinion. This, by the way, was just the topping of USDT, which was part of the end of the bear market. So Tether dominance, and it's on the same. All the charts have been on the weekly time frame. You had that inverted HVF. You made that target to the downside. You can see the squeezy Japanesey right there. Down, you made second interim, you rally, and you spilled right the way through, and you'd been in a channel up, and you actually had amazingly bang a full return move to the funnel at one point. That was where it was a bit sketchy, and then you had the breakdown and then the return move, and you're in a spill. So the interesting part about the structure overall is that we've also drawn a 4% USDT dominance neckline still to be made, and that would then give you a right shoulder. So you would have left shoulder, and the interesting part about that is that generates targets as well, head and right shoulder. So Greek S, there you go. We get back down to the 4%. We think 4% is a key level. There was a lot of resistance here, and you squeezed your way up in the bear market over there. This would take you down to 1.69 as a target. So that would be very, very low Tether holdings, sub 2 Tether holdings. That would mean most people are all in on crypto. So the use case is mainly as a gateway mechanism into crypto. The amount of people sitting in dollars in a Tether sense would be pretty low. So that would mean Pete Bull. Everybody's buying Tethers purely for the basis of getting into their favorite altcoins or Bitcoin as a point of view. While it can dip lower, and it has been lower, if we have a look at its history, The peak bull, it's actually been really, really low. Wow, wow, wow. I think we've got a ridiculously low over here. I don't think we'll really get that low. I just question when it first came into existence. That's 2017. Yeah, 0.1. I'm not sure. I'm not sure if we'll get all the way down there. After the head and shoulders made its play, I wouldn't say that's the end of the bull market, but I would say it's the end of wailing in like a loon. Not that you should be doing that in any way, but be careful. Be a little bit careful after this. After this point, you should not be, there should be no adding new positions, chasing new degen coins. You should be retreating back into some tether as it's becoming unpopular. That would be my take, assuming that. So we'd also spoken about Bitcoin versus gold. So I just want to cover this chart as well. So Mt. Gox is paying back its coins, another 2,500 Bitcoin. It's actually turned out quite well for some of those people. If they were to get it, they won't think so. But the fact that they've been a forced hodl. If they're getting the actual Bitcoin, they'll actually be getting quite a bit of money. So this was the first cup gold nugget, the previous bull market for crypto. And we'd mentioned, and we were quite big on this, we were referring to it, we gave it that name, and we said it went very, very early. And that was basically with the election. You have the halvening and the election. And this is, guys, this is timed with the election cycle. It's no accident. Truly, it is no accident. It was designed this way. Make of that what you will. But essentially after the election, boom, 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 big bull market. And the interesting thing is this nailed the top of the 64,000 for gold. Bitcoin divided by gold. Look at it there. Bitcoin divided by gold. Absolutely nailed it. It was 34. So you went from 6 ounces here of gold needed to buy you 1 Bitcoin. 6 ounces of gold got you 1 Bitcoin. This is, personally, I think it's insane, but that just shows you how they're going to keep things digital, and they're going to shove all the digital debt and all of it into digital money. They don't want people getting physical. They can't control you if they can't force you into the interwebium to move it into digital cyberspaces and tax and put their bots on it and extract and charge and all of those things. If you hold something physical that you hold at home at your own cost, how do they make money and make you poor? It's a real tough call. Anyway, that all said, down, 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 you then set up a kind of an ascending another potential HVF. And many people are asking, I think this is a triggering event candle. That is really impulsive. I think you're back on. We've pointed to the fact that you have broken out of that broadening structure. That is continuation. So this is now moving. How much more does it go? Well, when it broke, which was the green line, your entry was 27. Here it is. It's on this side. And our take is that you end up at 106. So that's 27 gold ounces. Yes. So that is gold at 2,700 times 27 will get you your 69,000 odd that it was when it broke, 67 odd thousand, to now you're already 34. So you've got Bitcoin at virtually 90, and you've got, let's just pretend the gold's at 3. It's around 30 and a little bit more. So it's not quite 3, it's 2,600 obviously. So that's why you're getting a 34 at the moment valuation. Now, where we see this particular relationship stop is at 106. So if you're at 34 and you're going to 106, many of you will be able to do the maths on that, and you'll see that's a shade over 3 times that Bitcoin will go up. But remember, Bitcoin will be going up probably, even though gold is pulling back right now, will be going up probably on a strengthening gold. So by the time the bull market is over, let's say gold is indeed just conservatively 3,000. It's picked up $400. You'll probably have 3,000 times 106. You could have Bitcoin as high as 300,000. Now we've got our first 144s and 146, 147 150k range before it has a major rest. And don't forget, you had exactly that here. You had a rest before you made the high you had here, and then you made a final high. Now, this was not very different to that. I think it'll be slightly different this time. I think you could indeed get a second stage. So there's normally a half time for Bitcoin's main run. Some of you might say, well, the half time was the last 6 months from March to November, and you'd probably be correct. I think you get a shorter midway break point before you have a chance of making something like 300,000. However, if gold didn't do much, let's say it continues to fall at 2.6 and then comes all the way back to 2.6 or 2.5, you'd still be looking at a number over 250,000 for Bitcoin when you multiply that by 106. So 106 times the value of gold. Actually, crypto guys should look, hope, and wish for gold to go up so that you're multiplying that number by 106, whatever it is. And that could be peak sell. And by the way, it wasn't the perfect top, but it was very close to being. So you were there and you were there. It was a perfect takeoff point, and it gave you two opportunities to sell. And I would imagine if you'd taken the first, you're in your best condition, not waiting for the second, because you would have had to come back some way. So Bitcoin is dominating and eating gold's headlines. That is what we said, as gold has turned down for a rest, and Bitcoin is now on the charge. It's going to be more about the Bitcoin story. But you say, hold on, when you were riding your bike, you mentioned be careful though. Yes, so all of this is good, and it is playing the technicals that are in front of us. However, it never goes up in a straight line. Things do never go up in a straight line. And fundamentally, the economy, the debt markets, the housing markets, the unemployment that is increasing, the increasing CPI, the fact that I wouldn't expect too many more rate cuts, to be honest truth, because the market hasn't accepted them very well. We've also shown the US 10-year and said we expect some element of the US 10-year to come back. So I'll say goodbye to Doggy for a second. And the US 10-year has already had a shooting star event, which is kind of as we expected. We said it's going to stay within the falling wedge. So let's just remove some things there and show you this. We've been watching the squeeze higher, and we said it turns here. That blue flag is a localized high, and that you're going to turn. And what did you get? You got a shooting star. We've said this before. We said you're going to come back around and some degree down. For rates to go down, that means you have to scare some money back into bonds. That normally is disinflationary risk off. So if you whale in late, if you're not already in and you don't have stop losses, this is the thing we talk about. This down leg, let's say it only goes to the halfway mark. It could in fact go all the way down to the other side before it bounces back up, is a situation where you will be seeing reasons, fear-based reasons normally, for people to be buying bonds and for the yields to be coming down because they're being demanded. So that would be cutting of expenditure by government. There would be a reduction of liquidity. There would be wars, people afraid, people rushing into dollars, which they buy treasury bills and they hold essentially a dollar and an income-bearing asset. And for that to happen, that is not a risk-on environment, it's a risk-off environment. So we are now at this level where that's due to happen. This is why we've been warning, don't lose your stuff. Don't lose your head, don't go whaling in. We expect this to turn into a falling wedge, which means there is some degree of downside, which is a demand destroying event, could typically be part of that, and you're very close to that point. We don't expect this to just carry on up like this, although it could happen. On balance of probabilities, it's signing to us that it's probably getting quite close to its high end of the range and needs the first of these two lines, one of these two lines to happen rather than that last one I drew. So that's the warning. We are bulls. We have been bulls. We told you about the continuation, but we have to also give what sounds like a mixed message by warning of the demand destroying event potential. Have we done everything we wanted to do? Not quite yet. We mentioned the gold is on the downside. We've looked at Bitcoin versus gold. We've recapped that Tether is in a downside move. The oil market's looking down, also point to, and we have downside targets. The consumer being wrecked, less travel, less packages being bought, less Amazon purchases, less everything that involves oil, packaging, which is a huge inflationary measure that points to a sudden spike down in inflation expectations. That's going to see money back into bonds. That's going to see oil price down. So all these things are just warnings that, don't chase a pump if you're not already in. I think that's the bulk of what I wanted to cover with you today. Don't forget, if you go to our free course, you click on the link, enter your email, you will get our newsletter thoughts before anyone else, anywhere else, before any Substacks, before anything else. You'll get the diagrams, plus for a week you will get a daily short form video that will tell you a little bit about why we do what we do. If you like what you see and you want to continue your engagement with us, you can always book a call by using the links in our YouTube. We never contact you. We never solicit funds from you. Anybody who is doing that is a person of disrepute. Okay, thanks for watching. Bitcoin to keep going up, and to recap, in the end, our expectation is at least a 150 before a major raise, pullback, and a possibility of it going to 106 times gold's price, whatever that may be. Remember, gold could go down too if we had a very strong, I don't overly forecast that, but if you had a strong disinflationary event, you could lose a couple, 10, 15, maybe even 20%. Again, I would treat that as a buying opportunity. But 150,000 for Bitcoins on the confluence of targets, both on the continuation pattern and the inverted head and shoulder, and also the possibility of more on top of that subsequently after a bit of pullback and churn, maybe a 3/4 May mark, pause point that keeps everybody idling for a while. That could actually see 106 times whatever gold is, and I would expect that could even, outside possibility, be on the 300,000 and upwards level, depending on where gold is. Okay, thank you for watching. Liking and sharing is appreciated. Until next time, catch you later. What do you think? Is it going to be 150 and out on Bitcoin, or are we actually in the shout for the 300K? 150 or 300K? Give us your thoughts below. Will there be a demand destroying event that will be disinflationary that happens part the way through this move, or is Bitcoin getting to 150 all on its own, without the need of first a crash and then another wave of proliferation? I'm interested in your thoughts as a poll. Will we get a DDE before 150, or it's just going to go there all by itself and maybe after the 150 mark before 300, if that is to happen? I'd love to hear your comments. Thanks for commenting below, and speak to you later. All the best to you. Trade small. It's not necessarily the time to chase in. Bye for now.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.